Hello, 71 Republic viewers. My name is Matthew Geiger. I am the CEO and co-founder of 71 Republic. Today I'm joined with Ben. He is a small business owner, owns a financial firm as well, and is starting the Crypto Planner. So, Ben, welcome to our podcast.
Thank you for having me.
So, Ben, give us a rundown of who you are and what you're trying to do with the Crypto Planner.
My background is as a entrepreneur, as you mentioned. I currently own a small financial and insurance firm locally. I decided to start the CryptoPlanner.com mostly because I think that a lot of the general investing philosophies that I talk about with all of my clients regarding every other investment class out there are a lot of similarities to cryptocurrencies. There's also obviously a lot of differences, but as more and more of my clients were asking questions, it became apparent that inside of the cryptocurrency space, there were really no seasoned financial professionals out there offering assistance to people who are either new to cryptocurrency investing, interested in cryptocurrency investing, or potentially they have actually dipped a toe in the water of cryptocurrency investing, but would like to do so in a little bit more of a logical way.
Okay. So, with the Crypto Planner, you're aimed more at a older demographic than most cryptocurrency investment firms. You're looking to reach more of a middle aged base. How would you rather describe your demographic?
That's a great question. So I would say, obviously I go to a lot of crypto meetup groups. I read a ton online and, participate in as many activities as possible. And, there's no question that cryptocurrency investing right now is skewing towards a much younger class of investors. So, when I say younger, I mean, we might be talking with people who are, college age, maybe even less than college age, which is actually great because it's good to start investing young. It's good to start understanding investing young. I think the majority of clients for the CryptoPlanner.com are probably going to skew more towards the older range of cryptocurrency investors. I would guess that probably means most of our clients are in the maybe 30 to 45 range. And I would also guesstimate that most of our clients are probably investing somewhere between, maybe $5 to, $10,000-$20,000 into the cryptocurrency space. With the cost of Bitcoin right now being somewhere around $9,000 and change, I think that a lot of the younger generation, they're just getting involved at a very small level just to kind of see how it works. And that level could be a few $100s or less. I think that that's awesome. I think the majority of investors that are going to get the most out of our website are going to be putting thousands or potentially tens of thousands in, albeit a small percentage of their total investment portfolio.
Okay, so one of the issues, however, with cryptocurrency is its volatility.
Oh, yeah.
If I am a middle-aged man or woman and I'm investing into the stock market, I have the assurance that it will not be as volatile as cryptocurrency. So hypothetically, if I were a potential investor or a potential client of yours, and I own a home and I'm investing a large amount of my money that I earn into a portfolio, and some of it were to be cryptocurrency, what would you say to me in terms of how do I avoid losing a lot of money with the volatility of cryptocurrency, and why is it better than just investing into the regular stock market?
So let's unpack that question a little bit, because I'd say that's pretty much the meat and potatoes of the entire cryptocurrency investing conversation. So first things first, I would say, obviously each portfolio for each one of my clients is different. So there is no, quote, ideal portfolio. But generally speaking, my personal investment philosophies, I think cryptocurrency should make up a small percentage of the total investment portfolio. So there is no question, as you pointed out, cryptocurrencies right now are significantly more volatile than, let's just say, the stock market as our comparison. That being said, the stock market certainly does have periods of volatility. Right now, we're going through one of those periods, but the extremes of the volatility, in any given day, the stock market might move a couple percent up or down, maybe even 1% up or down, and that would be considered extreme. Cryptocurrencies, probably have to go 10% plus to be called extreme, but it happens all the time. So most of my clients, as far as to answer your question about what is the smart way to do it, the smart way to do it is to only allocate the portion of your total investment portfolio that you're willing to have in that type of volatile environment. So for some clients, that may be 5% of their total portfolio. For some clients, that could be 10 or 15%. But I would certainly say that I do not advocate what I see a lot of quote unquote financial experts in the crypto space advocating people putting 50% or more of their money into cryptocurrencies, because frankly, it is very new. And, if it does end up going the span of time, so let's say cryptocurrencies stick for the next 100 years, there'll be plenty of opportunities to get into cryptocurrencies in the future where volatility will be significantly lower. There's no reason to take that large of a gamble right now, when it is, to even call it in the infancy phase would be an understatement.
Okay. Now, if I am a potential client and I am going to be investing into cryptocurrency, one of the issues with cryptocurrency is the fact that many people that are looking to get into it have no idea what it is. So how would you explain to somebody who maybe has a very limited knowledge of technology or a very limited knowledge of new tech or just futurology is what we like to call it? How would you explain it to somebody in their 30s or 40s? How does cryptocurrency work?
Yeah, so the first thing I would say is the cryptoplanner.com/learn. We've been trying to update that page as frequently as possible, just with a lot of the questions that I'm getting as I've been starting this new venture. But the way I would explain cryptocurrencies to someone who is an experienced investor, and by that I mean someone who's been in the stock market before, so they kind of understand the basics of investing. They just don't understand this new asset class of cryptocurrencies. I would explain it probably as this. Cryptocurrencies are just digital forms of currency. So the US dollar is a currency, the euro is a currency, a Bitcoin is a currency. It's just a digital form instead of a paper form. I think cryptocurrencies being in this new phase that they're in, right now we have not seen a strong use case for cryptocurrencies the same way we have dollars. So we know what you can buy with dollars right now. As far as what you can buy with cryptocurrencies, it's much, much more sparse. Having said that, the concept is very easy to understand. It's a digital currency, just like a dollar. It's traded just like a dollar. It can be used to buy services, exchange money between two parties, and can be used for goods. As far as what it does in the future, that's still remains to be seen.
Okay. Now, why would somebody invest in cryptocurrency? What is the reason? We already went over the difference between volatility in the stock market and cryptocurrency markets, but just in general, why would somebody invest in cryptocurrency?
Candidly, I think most people are interested in investing in cryptocurrencies right now because they just see the huge gains over the end of 2017 that, it's kind of what they call FOMO, fear of missing out. So I'm sure that the majority of the people who have gotten interested in investing in cryptocurrencies recently have done so because they've read lots of, what I call crypto porn, all these articles that are just making people seem like, well, if you had just been smart enough to invest your money in cryptocurrencies, you'd be a millionaire now. But I don't like to follow those types of fluff articles. Why someone would be interested now? I think a seasoned investor would be interested now because they see it as a new asset class developing in front of them. Certainly a lot of people have called this the Internet 2.0. And so the idea of could you, if you knew then what you know now, would you go back and buy shares of Amazon? Would you buy shares of Google? If you knew what these, companies were going to end up being, as far as now, they're some of the largest companies in the S&P 500. Back then, they were nothing. So cryptocurrencies today do have the potential of being that next chapter of the internet or not. So I think that the people that would be interested in investing now are those that see the potential, they see the volatility, they're willing to accept that level of risk. And, for that reason, working with a professional like me, we can help to allocate the proper amount of money towards this, investment.
Okay. Now, for some of your potential clients, they will see issue with the fact that they cannot physically touch or hold their investments. And with some stock market investments, it's a commodity. For example, if you're in the movie Trading Places, it'd be frozen orange juice.
Right.
But you can't actually necessarily get those things, but it exists. So when somebody invests in cryptocurrency, say Bitcoin or Ethereum, they see it come up in their wallet as a number. But how do you explain to them that that number is an actual asset and that it exists?
Yeah, that's a great question. What's nice is most investors now have some form of investment portfolio. So that could be through their employer. Maybe they have a retirement plan that they and their employer contribute to. Maybe they have an IRA that they set up for themselves. Maybe they have an E-Trade account they set up for themselves. So, fortunately, where we're at now as a society, as far as investments go, we're very used to electronically sending money to a third party and then having that third party provide us in return an electronic guarantee that we've purchased something, whether that be shares of stock, shares of an ETF, etc. When you look at cryptocurrencies, obviously you have a very similar thing. You take fiat currency, in this case, let's just say dollars, you send it to a third-party exchange. The exchange then gives you in return a token. Call it a share of stock, call it whatever you want. Obviously, with cryptocurrencies, these exchanges are so new and so untested that most smart crypto investors are not going to keep their cryptocurrencies on the exchange. That's something we go through with all of our new investors, how to safely store your cryptocurrencies. But conceptually, it's something that a lot of people understand. So, for example, a lot of people like to draw the comparison between cryptocurrencies and gold. Well, someone who invests in gold probably does not buy that gold, store it in their home inside of a safe. Instead, they're buying shares or portions of gold that they're now trusting a third party to ensure that their name is stamped on that particular block.
Okay. Now, another potential issue with the crypto planner is that you're hitting a specific demographic. So then what would you say to somebody that would be younger than your intended range of ages, or somebody that would be older? Are they able to participate in your program, or is there an actual age limit, or how does that all work?
So, I deal with anybody 18 or over that wants to subscribe to our service. I certainly want to see as wide of an age range as possible, as well as, demographic range, gender range. Right now, I've read statistics saying, that cryptocurrency investors are, 95+% male. I think moving forward, we could see more females getting involved. And I certainly hope that, my service is able to be one of the contributing members to that statistic. But, there obviously, as long as you're 18 or over, there's certainly nothing to preclude you from working with us. As far as, who's going to get the biggest benefit from working with us, it is my belief that our subscriber base, for the most part, are going to be people who have invested before. If there's an 18-year-old who understands mutual funds and stocks, in some cases, they may even be more qualified to work with us than, certain clients of mine in their 30s and 40s who have unfortunately never really experienced it before. And I will kind of put the caveat, for someone who has never invested in anything before or experienced anything before, cryptocurrencies is by far not the first place that I would recommend that they dip a toe.
Okay. In addition to some of the other potential questions that investors in your service might have, some people that would be working with you might already have a limited knowledge of cryptocurrencies. So, say an investor comes to you knowing what Bitcoin is or knowing what Ethereum is, but how do you explain to somebody that you should invest in X coin or Y coin that might be more obscure than your traditional Ethereum or Bitcoin?
Yeah, so what's nice is for experienced cryptocurrency investors, let's kind of take it to the extreme, right? Let's say someone comes to me, they've already purchased, major coins, altcoins, maybe they're even a software developer or, there's some sort of cryptocurrency developer themselves, and they come to me and say, what is it that you can assist me with? Our service is not a predictive service, meaning, we're not here to analyze and find the next big hot altcoin. What we are trying to do is we're trying to help people who are interested in investing in cryptocurrencies do so in a more logical and smart way. So if somebody comes to me and says, I've been investing in cryptocurrencies for the last 5 years, I know everything about them, I found your service, could you explain to me what the benefit is? I would tell them that the benefit is more on the general investment philosophy side. So every week we have weekly webcasts that go out to all of our members, and a lot of the topics that we cover in those webcasts are a little bit more general in that they are investment philosophy topics that we then relate to cryptocurrencies instead of a weekly webcast of here's what the best cryptocurrency is right now to be investing in. And when I look around the environment right now, YouTube, Reddit, and stuff like that, most of the videos I see are just people pumping coins. It's based on their own beliefs. Some of them have way more information than others. Some of them have, in some cases, insider information, or they're even part of, a pump and dump scam or something like that. These are not going to be the types of things you're going to find on our weekly webcast. What I haven't seen a single person producing content doing is relating cryptocurrencies to sound investment principles that over a very long period of time have proven to be wildly successful over very short-term, quote unquote strategic moves.
So moving on to more traditional investment practices like you would see in a 401k or a Roth IRA, in general, moving on to more of your ethos, if you will, you already own a somewhat of a financial firm where you do financial advisement and things like that. How do you translate your skills advising people on their personal finances to cryptocurrency? What is the translation there?
Yeah, so typically, here's the process when we meet a new prospect or a new potential client. The first thing we like to do is just to get to know them a little bit, to understand a little bit about what their experience has been with investments. One interesting thing I can tell you, a data point that I like to use, people who had investments before 2008 and 2009, when the huge crash happened, have a much different perspective on investments in general than people who have gotten into investing after that crash. If you are talking to someone who's never experienced a 40 or 50% drop in the stock market, which is what we saw, then they have a much different perspective. So the first thing we like to do is just get to know our potential client a little bit. Then we start to establish a time horizon. How long are we looking into the future? So if you are 40 years old, you're planning on working until you're 65 years old. Now we know we have about a 25-year plus time horizon. The next thing we're doing is we're talking about risk. Each individual investor has a much different risk tolerance. And so I like to, kind of run doomsday scenarios where we talk about how would you feel if you woke up one morning and found that 50% of your investments were gone? How would you feel if you woke up one morning and found that it had gone up 10% overnight and then the next day it went down 20%, for example? So these types of questions and these types of conversations allow us to understand a person's risk tolerance. The final step is then we're going to make a plan that's going to fit their time horizon, that's going to fit their risk profile. And so, to just kind of circle back to cryptocurrencies fit into everything just like any other asset class: stocks, bonds, mutual funds, gold, what have you, commodities. But we just make sure that it's a investment philosophy that's going to work for them so that they know what to expect, kind of the good, the bad, and the ugly.
Okay. Do you personally invest in cryptocurrency?
I do. I consider myself a relative newcomer to the cryptocurrency space, and and to quantify that, I've been interested and investing in cryptocurrencies just over the last several months. When I first heard of cryptocurrencies, I probably had the same belief that most investors did, which is that it was just a huge bubble. Call it tulip mania, whatever cliche terms you want to give it. But what I found is the more I started educating myself, I realized that there actually was an opportunity here. Again, I don't predict the future. I have no idea what it will look like 10 years from now. But I know right now it appeared to me to be an opportunity. So that's when I personally decided to invest into cryptocurrencies. And that was, again, right around the same time that so many of my clients were starting to ask those same questions. And so I felt I owed it to them to educate myself to be able to answer them better. And that's kind of where the CryptoPlanner.com was born from, realizing that there are serious investors out there with real questions and just knowing that there's not a lot of good information out there for those people to find.
So since cryptocurrency is relatively new, there's a lot of relatively new upstarts in the cryptocurrency space, as you call it, and specifically relating to investment strategies and people assisting and consulting with cryptocurrency investments. So being new to I guess you would call it the cryptocurrency investment sphere where you're advising people, what gives you the edge over another established company? Using the word established lightly, but what gives you the edge over somebody else? I mean, if I'm looking to invest in cryptocurrency, why should I choose the Crypto Planner over XYZ company?
Yeah, a lot of the XYZ companies that you're describing were kind of my motivation to start the Crypto Planner. And by that, I mean, if a XYZ company or, service is being offered by a, 20-something-year-old who bought Bitcoin back in 2010 because they thought it sounded interesting, and then just, overnight, all of a sudden in 2015, or rather 2017, they just became successful. The problem is that person basically bought a lottery ticket and won. So if their service is saying, let me show you how to go buy a lottery ticket and how to win, that is what they are capable of doing. The challenge with that is, if we're just going to say for the moment, a lot of those huge, 4,000+% gains aren't going to come again, let's just say in the next few months, then now we actually have to have a much more rational, logical way of investing in cryptocurrencies. And so I don't view cryptocurrencies as any different than any other asset class or sector of the market. So for example, you could say that, the technology sector, healthcare sector, consumer goods sector, cryptocurrency sector, that's the way that I look at it. So with my clients, I think that my clients, have a much more realistic expectation of, what they think they're going to be getting involved with cryptocurrency investing in general. And B, I think that they have an expectation that what I'm bringing to the table isn't, the same expertise that a cryptocurrency, Bitcoin developer would bring to the table. Technically speaking, there are people that know far more than me when it comes to developing blockchain technology and cryptocurrencies. What they're getting when they deal with me is someone that for over a decade has been helping people with financial planning, helping people plan for retirement and explaining that process and, walking people through that process. And that's really, the clientele that we're looking to connect with. We realize that we can't be everything to everybody, but we know that there are, likely tens of thousands, if not maybe hundreds of thousands of people that would love to work with us if they just knew that we existed. And so that's why we're really trying to get ourselves out there.
It's really hard to predict the future. No one's good at it. No one can do it. But if you had to speculate, do you believe personally that cryptocurrencies are here to stay? Is it something that's going to last another 10, 20, 30, 40 years? Or is it something that might fall flat in the future?
So my personal opinion, I'll kind of paraphrase something that I heard a quote-unquote Bitcoin evangelist saying, the cryptocurrency invention has already been invented. So a lot of the people who are a little bit pessimistic or a little bit bearish on cryptocurrency say, well, once governments start to regulate it, or once people realize it's not as easy to use as a Visa credit card, for example, then people will kind of move away from the hype of cryptocurrencies. I look at it a different way. I think that even if governments regulate it, even if more centralized forms of cryptocurrency end up coming out in the mainstream through banking or, through governments or whatever, the invention has already been invented. You can't uninvent digital money. Plenty of people, if you had explained to them what PayPal was, even 10 or 15 years ago, they would say it's crazy. Sending money via a website or even, nowadays through a phone to a total stranger on the other side of the world in some cases to buy a good on eBay or some other web form that you found would be considered just insane. And now it's something that we all do almost on a daily basis in some cases, and we don't even think twice. I mean, we have Amazon connected to our credit card, so with one click, we can purchase something. 2 days later, it shows up to our house. So I think that digital currencies, I think you'd be foolish to think that they're not here to stay. To take it a little more specifically, though, if you said, what's Bitcoin going to look like in 10 years, or what's Ethereum going to look like in 10 years, then I would say it's anybody's guess. I mean, if you look at, again, the internet to make that analogy, whereas some companies like Amazon and Google really, thrived and have now become some of the largest companies in the world, other companies like America Online, when was the last time you even heard America Online? So, not every coin is going to make it through. Not every development team or development project is going to end up having huge dividends or having big societal benefits. But digital currencies, the one thing I like to point out when I'm talking with groups, whether it's a meetup group or if I'm talking to individuals, is we have the privilege of being in the United States where we have a very stable currency, the US dollar. It's also very easy. We can go to an ATM. You can take out money. If you put money into a bank, it's safe there. There are plenty of other places on our planet that would dream of something that we have here. And so digital currencies solve so many of those problems. And particularly if you look at a lot of developing nations, where you see no banking infrastructure right now, no insurance infrastructure right now. Digital currencies in some cases may be the bridge between a end user, a person, and the ability to utilize those advantages without having to have that third party involved or without having to have an entire banking infrastructure developed first. So I think people who write it off as a fad, I think that they are either caught up in the bubble of a privileged society, not realizing the benefits that this may have to less privileged societies, or they're just the same people that didn't understand and said email would never replace regular mail, or that internet searches would never replace, library or publication searches.
Shameless self-promotion time. Where can people find you? Are you offering any promotions currently?
Yeah, so, I obviously encourage everyone to go to thecryptoplanner.com. There you'll be able to find out more about me. You'll be able to find out more about our services, our pricing, and also just get a much better sense of exactly what we are out there offering. To listeners of this interview and to readers of 71republic.com, we're actually offering for the remainder of the month of March 71% off either a monthly or annual subscription to thecryptoplanner.com. I can say that, there's a lot of similarities between 71 Republic audience members and people who really understand the benefit of cryptocurrencies. And so being on your website has been a huge privilege, which I thank you for again. And again, I encourage people to go to thecryptoplanner.com, learn about us, consider joining. And right now through the end of the month, you'll get 71% off if you do.
Thanks for coming on the show, Ben.
Thanks, Matt.
Take care.